Our final video for Business 630 for the Spring 2 session. Good morning, everybody. This is Professor Hasse one last time. Today's date is Monday, May 26th, and this is our last week 8 weekend update video. It's going to be concerning itself with one last brief look at the electrics case. I think we've been over it enough. We've been talking with many students this week about it, and as we come down to the final days, you now have all the information provided through review sessions, through the various lectures over the last few weeks, and some student hours over the last few weeks. So now's the time to wrap everything up into the best interpretation of whether the Electrics Incorporated should go to a gas to provide a electric motor unit to convert a car from a gas engine to electric engine. And you are determining which product is the best, or is neither product the best based on their return analysis and the status of the market and all that sort of thing. So you'll be writing your paper and spreadsheet to post by this Sunday, May 28th. And again, there's no extensions. Everything must be loaded in by midnight on Sunday night. Okay, before we get to that, just a couple of other things. We'll be talking about leasing today, just as I've mentioned this week 8, there's no real assessed nature of leasing, but it's another alternative to capital. Instead of going out and purchasing an asset by borrowing money or using your cash, you can lease an asset, have the same use of that asset. You just do not own the asset and lose out on some benefits about that. And we'll talk about those benefits in just a minute. And then finally, as we close out the class this week and you finish up your work, please don't forget to do your course evaluations for this class. It's very helpful. It helps me, it helps the school understand, get some feedback from you about our class. And if you go to the course information file folder, you'll see our link, depending on your CRN 2626 or 1111. Click on that link and please complete your evaluation. Again, it's very helpful to us to maintain strong classes, strong value for you all. So please, if you can take the time this week as you complete your work this weekend to do that evaluation, it's very helpful to me. And then finally, as we've mentioned also before in class, this web platform of Blackboard for our class will be open through 2025. If you need any additional work or recommendations or help, please feel free to contact me into the future. If you need job references, a reference letter from a professor in your MBA program, I'd be more than happy to do that. So please stay in touch if you need any additional materials. Also, our YouTube playlist will be available into the future. So you have access to all these materials as you complete your MBA studies and go out into the world of finance and financial management. I want to refer you to the Business 630 assessment case, electrics case, and just go over a couple last points and also concentrate on a couple areas I'm hearing back from students about difficulties they're having. And remember, this is an MBA case, meaning the student, you, has to be able to sort things out on your own, has to be able to interpret the data and analyze the data to make the necessary recommendations and interpretations so given in the paper. So one of the key areas beginning off, as you see our checklist here, is you have to determine the weighted average cost of capital. This weighted average cost of capital we used in your NPV analysis, in your base case analysis, will be used as a discounted cash rate to determine your warranty cost per unit. So it's a key figure right off the bat. And in this case, the details for the capital structure are given as the relationship of debt to equity being 1.5. In other words, debt is 1.5 times greater than equity. Knowing that, you should be able to sort out what debt is to assets and liability, and equity is to assets. Remember, capital structure is the percentage of debt and equity to assets. Well, if you know the relationship of debt to equity, you can use that relationship to determine those percentages. Okay, that's important because then you can computate the after-tax cost of debt, the cost of equity using the capital asset pricing model, and using that capital structure. So you have to think a little bit differently in this case in a wide variety of areas. In addition to the analysis of the case where you're given two products, two different controllers, and the main determination of those controllers is their cost, the CTX13 and the MT78. Each one have different warranties. But also you have a motor that's part of the cost. In other words, you have the motor and then the unit or the controller determines and drives the motor to do the electric transfer of power in an engine. So you're doing two analysis, one for the CTX13 and one for the MT78. The CTX13 and the MT78 all have parts labor costs, parts cost, and the cost of the controller. In addition, they each have warranties, $75 on the motor, $90 on the CTX13, and $100 on the MT78. These warranties are for 5 years. So this is an 8-year project. So for 8 years, you're going to produce products to the tune of, in the average scenario, 40,500 units a year. Each one of those 40,500 units is going to have a 5-year warranty. So the problem is, how do you get 5 years of warranty into one number to use as your average cost or warranty costs for your analysis? Well, you use the discounted cash flow, the present value of money, taking those 5 years and discounting them into one number, and then using that number as your variable cost per unit for the warranty. This is complicated, though, when you take a look at your sensitivity analysis. The sensitivity analysis has 2 variables, not 3 variables like you had in case number 2, but 2 variables. One is the selling price per unit, and the other is the cost of the controller. Now, the controller has 2 costs, the cost of the installation and the warranty. So you have to combine those 2 costs as a sensitivity variable in your analysis for sensitivity to determine the NPV at plus or minus 10, 20, or 30% variations to that sensitivity. You did this again in the case number 2, but it's complicated in this case by that you have 2 costs combining into one as your sensitivity variable. You have to set up your analysis, you set up your spreadsheets to make sure you have that information available. Okay. Then when you complete your spreadsheet, as you can see here on the checklist, you have 9 tabs, each tab representing a piece of data that you're going to be using. And when you write your paper and explain your interpretation of what you recommend the Electrics Incorporated to do as far as these 2 products. That's the electric case. Remember, you have to concentrate on the areas that you have not really seen in other cases, but it's basically the same, just taking a look at it different ways. And so that's the key thing to this case. It's up to you, the MBA student, to rationalize it, get the data, interpret the data the way the case wants you to interpret it. That's the key part of the assessment here. It's not a cut and paste template like case number 2 was. You have to actually create data based on the information given you, like the capital structure percentages, like the sensitivity analysis. So, and like the depreciation schedule. MACRS is the depreciation schedule, a totally different schedule than straight line. So you as the MBA student have to recognize these interpretations, research them, study them, interpret them, and put them into the presentation of your data. That's the key to this case. Now you have all your grades posted in Blackboard up to this weekend. You know where you stand in class, and everybody pretty much in this class has a pretty good average, A or A minus, heading into this last weekend. But remember, this case is 25% of your course grade. So you need to concentrate on making sure you present it in a fashion that gives me in the spreadsheet analysis of those 9 tabs, and then answers the questions that are given on page 4 of your electrics case study. Again, I will be available this weekend. I have a backlog of some spreadsheets and drafts that I need to look at later on today, and I'll get to those. Then I'm going to be tied up with commencement all day tomorrow, Saturday, of which some of you are participating in. But I will get to your work if you have questions and concerns over the weekend. I'd be very limited to Zoom presentations, but if you send me your questions via email, I can get to them rather quickly. All right, so let's just take a look at the final section of our course, and that is leasing. And there's a section in our week 8 file folder that deals with this right here, lease financing. There's a great spreadsheet and a PowerPoint that explains leasing, and a great example right here, this chapter 19 lease example that explains the basics of leasing. And so again, you're not going to be assessed on any of these, but it is alternatives to capital financing that you might recommend to the Electrics Incorporated people if you feel that the return on those 2 different types of products for the motors is not up to what you consider good standards or good return. You can suggest leasing. So again, this is another alternative to capital fundraising. Again, it's always good to come out of your financial management or corporate finance class and MBA study is having different alternatives to raise capital. Many companies, especially smaller companies or mid-sized corporations, do not have the capital or the credit to go out and purchase big, large assets, capital expenditures. So they have to lease equipment. And it's very important for them to know that this leasing is another alternative to raising capital. So for example, here's an example on a spreadsheet here, and you might want to refer to this spreadsheet even after this class is over. This is a good idea, especially to determine the value of a real estate property, of renting versus purchasing, or buying a second income property for renting. So again, here's an asset that has a value of a cost of $1.5 million. There's 2 alternatives here: to purchase the asset with a non-amortized loan, and to lease the asset at $400,000 a year to lease the asset. So the loan here is a non-amortized, meaning it's you pay back in the loan at the end of the life of the loan. So this is a 4-year loan, which is non-amortized, meaning there's no monthly principal and interest payments, only interest on the loan. The interest is at 15%. His company must have bad credit. And so as you can see, you're paying interest for the first 3 years of that $1.5 million loan. And then in the final year, you're paying off the loan plus 1 additional year of interest. Now, here are the advantages of owning an asset. First of all, you can deduct the interest expense. You take the interest times the -1 minus t. The tax rate in this is 40%. So you can deduct 40% of the interest of the company. Also, you can deduct the depreciation. Here, this is a 4-year MACRS depreciation schedule. Notice these 3 percentages total 100. And the first year, you're depreciating 33% of 1.5 million, or 495,000. Take 40% of that, you're having a tax savings of these numbers. So you're accumulating, by owning the asset, roughly $960,000 of tax savings. Plus, at the end of the life, you dispose of the property. Let's say it's a salvage value of 250,000, of which you pay, which you have tax on that sale, and then you have additional cash coming in the life. But if you notice, with the expenses of paying off the loan plus the cash flow of your tax benefits, you're generating roughly this amount of cash flow over the period of 4 years by owning it. Positive cash flow in year 1 and 2, and then as you pay off the loan in years 3 and 4. Take that at 9%, your present value, which is the cost of capital is the loan is 15% with a 40% tax rate. Your taxes after tax cost is 9%. So you discount that cash flow over 5 years. And as you can see, you have a net present value of a net cost of 885,000. Well, if I decide to lease this asset instead of purchasing it, all I can do is I pay $400,000 a year, of which is a business expense. So it is tax deductible. So I can take 60% of that as a tax deduction. So I'm generating this actual cash flow over the course of the 4 years. If I discount that back at my 9%, notice the cost is a little bit cheaper, $777,000. So again, in this case, with all the benefits of owning an asset, deductibility of interest, deductibility of depreciation, you still have it costing you more because first of all, the interest rates are pretty high. Now, in a lower interest rate scenario, owning an asset might be more advisable. It'll be cheaper on the loan. Also, the time period. The shorter the length of the asset life, the greater it is to lease. That's why many companies lease copiers, lease computers, because their lifespan is so small. It's cheaper to lease them and just bring in new equipment at the end of every lease, like say 2, 3, or 4 years. That's why a lot of companies rent or lease copiers and phone systems and smaller capital expenditures, because it's cheaper when you take a look at it as a net present value analysis of the true cost of the money due to the cost of their interest. And if the interest is lower, that cost is more in the favor of owning. But that's how companies do this, and that's how they decide whether to lease or buy equipment. And for smaller business, it's a no-brainer. You need to lease because you can't come up with the money, $225,000 a year in interest and paying off the loan in 4 years. That's just not happening for smaller, mid-sized businesses. So that's why they lease. And another reason, this is why we rent apartments. We can afford the rental payment, but we can't afford the money or the down payment to purchase the property. That's why many of us lease or rent. And then as we accumulate wealth, as we accumulate credit, then that option of purchasing becomes a little bit easier. So this is one of the key areas of alternatives of capital fundraising for companies, is the leasing option, leasing buildings, leasing equipment, even leasing people, temp agencies. Many companies, instead of hiring people and paying them full-time benefits and retirement money, they'll lease them from temporary firms, and all they have to do is pay an hourly rate to those temp agencies. Leasing people is quite prevalent now, as some of you might be aware of in your own businesses, because in short term, it's basically cheaper. I don't have to pay out fringe benefits. I don't have to worry about vacation schedules. They just come and work a certain job. I pay them a certain rate, and that's the end of it. And that's become a highly lucrative business in the world of finances, temp agencies or employment agencies that lease out people in addition to leasing out assets. Amazing. So again, this is an alternative that's very important to know of as a key ingredient in understanding financial management in corporate finance. So as we complete our course in business and corporate finance, I just wanted to again thank all of you for your participation. Asynchronous and online study is not easy. It's difficult, especially at advanced MBA courses like this one. And I appreciate all your efforts to keep abreast with this, to stay up to date with our data, and also with all the various other things going on in your lives, like work and family and everything else. I am very appreciative of all your efforts, and you've all done a very good job. Just stay true to your discipline this weekend as you finish up this case, so you can end up getting a solid, good grade. And for those of you who are graduating, hopefully I'll see you on Saturday at graduation. But again, I want to wish you all the best. Please feel free to include me in your networks going forward, and I wish you all the success in the future. Again, as I said earlier in this video, I'll be around this weekend to answer any last-minute questions about the case. but do your best, and I look forward to reading them early next week when our grades will be all posted by June 1st, next Thursday. If you complete your course evaluation, you'll really make me happy. So again, everybody, thank you. I'll see you all down the road. It's been a pleasure, and have a great summer. One last time, adios.